Good evening, ladies and gentlemen, and welcome back to Walk the Block, where we are navigating digital finance all together. We got a good show for you here tonight. Yes, we are doing the countdown to the Federal Reserve meeting happening on Wednesday, but there's more important news that has come out since then, at least to hold the time over until then. Mainly, Dogecoin becomes the third cryptocurrency to get an ETF. Kind of. We'll talk about that one more in detail when we get there. But outside of that, yeah, Bitcoin and the alt markets are looking like they're doing something. We're going to take a peek at it as a bit of a follow-up to last week's episode when we were talking about different seasons, including altcoin season. But outside of that, hello, everybody. I'm Zenith. It's great to be with you all again. I'm feeling much better today, I have to say. So I'm very excited about that. And I'm joined by my excellent co-host, Tracker. How you doing, buddy?
Doing well, Zenith. Doing well. Yeah, everyone's kind of been in this sitting pattern, waiting to see what the Fed's going to do. Obviously, everyone's already priced in a quarter. Are they going to go more aggressive? That's the big question. Yeah, looking to get into all this stuff. Like I said, there's been some action. We're going to touch on those things tonight, obviously, but really, it's more of a wait and see on Wednesday that's going to trigger everything. And not just that, but what else could they tell us? Are they going to be dovish? Are they going to be, sort of like, those are the things we're going to be paying attention to, not just on the cut itself.
Oh, yeah. Yeah, we are going to definitely be paying attention to the press conference later in the week. But outside of that, yeah, just got to wait and see. Patience is the virtue, right?
Absolutely. And obviously we're still, there's people on the fence. Some people think it's now is the time to take profits. Others are feeling like, nope, it's time to buckle up because things are about to take off. This is what creates markets. So it's going to be interesting to see.
Yeah, well, if anything, crypto market appears to be doing pretty normal stuff on the charts. I know that's just really just wide brush to paint with, but at the same time, one of the other interesting things for me is looking over at the S&P 500. That appears to be doing pretty well as well. And it looks like, I mentioned this on Twitter previously, I think that the market has factored in a quarter point drop. I don't know if it's priced in anything larger than that. So that's why I think that
I agree.
It's kind of pretty much operations normal over when it comes to traditional markets. But again, we're just going to have to wait and see what we get. And we can even look at the numbers about what the odds are saying. But outside of that, let's get it going with the first article of the evening. Yes. So here we go. Yes, Dogecoin. Well, Dogecoin was actually recently approved, but it did not start trading just yet. So the actual altcoin, or the actual indicator for Doge that we're going to be looking at, is this one right here, Rex Osprey. This is the Rex Osprey ETF for Dogecoin. It was approved. It is not launched just yet. They put it on a little bit of delay so they can get everything up and ready for it. So this is big news because this is the third ETF that is actually launched, and I was expecting other stuff before Doge, to be completely honest, but here we are. This is the world that we live in. Is this a bit of a surprise to you? The fact that we got this one before anything else?
Yeah, I would have think Solana, XRP. I mean,
those two are on my short list.
Yeah, there's a bunch that you could have had up there on the on that. Doge, it's not necessarily surprising the fact that, with Elon Musk and the current administration and how they use, the Doge coin and how they were doing a lot of the investigations and using Doge for whatever reason as the flagship name for the investigations throughout, mismanagement of funds. God knows that doesn't happen in the government, but that I think that's what probably had it more pegged. I'd be curious because who knows, maybe this was one of the agreements by having Musk in with the administration. Maybe this is one of the trade-offs that this would then lead to an ETF getting passed. It makes sense because they've been there. They've been in kind of like I know there was some falling out between Musk and Trump, but I think that had a lot to do with it, more or less.
Okay, that makes sense. I got to say, though, it's interesting to look at the numbers of what's going on with Doge, though, because It's actually been on a bit of a tear recently. So Dogecoin's price ran on Friday, even as the launch of the U.S. exchange traded fund ETF tied to the meme coin was delayed again. So it was supposed to launch on Thursday, got delayed a little bit later. According to CoinMarketCap data, Doge increased 4% over the last 24 hours, reaching 26 cents. And over the last week, it had gone from pretty much down below around 20 cents, and it had about like a 40% gain over 7 days. So the announcement came out. People start piling in a little bit. But what we see here is that according to the SEC filing, Doge was expected to list alongside Bonk, XRP, Bitcoin, and Trump official ETFs on Friday, September 12th. But Balkuna suggested that the listing is delayed until the middle of next week, likely Thursday. Another delay launching next week, midweek, probably Thursday. But earlier this month, the DOGE ETF won approval under the investment Company Act of 1940, a framework typically used for mutual funds and diversified ETFs. This sets it apart from Bitcoin ETFs approved under the Securities Act of 1933, which governs commodity and asset-backed products rather than fund-style vehicles. So that is a bit of, look, I know we're getting in the weeds on this one, but I think it is important to note, which is that one of the reasons the Bitcoin ETF was approved was because the SEC previously came out and just straight up said that, look, it's not a security. But now we have something that is not strictly called a security, or not strictly called not a security, or rather a commodity, but this is something that is launched under a different framework. So the reason I think that this is a bit of a significant story is because this is not just the third ETF, but it's a new avenue for the ETF to go. Is all this making sense?
I mean, from my side, it certainly does. I mean, anything that was going to be the third up was going to be very interesting because Bitcoin's obviously, like you said, it wasn't, they labeled it, but Ethereum getting past kind of opened up it for everything because of just smart contracts and what have you. But the fact that Doge is now being launched, that opens it up to everything now because, I mean, it's a freaking meme coin. It's the third ETF is a meme coin. It's just shocking to me. But the fact that, like I said, the fact that the Tesla and whatnot had been put behind it, trying to get, they've been champion for it, and they've been trying to turn it into more than what it really originally was, gives it a lot of meaning. It definitely will pave the way if this is getting passed, because now everybody else can say, okay, so what's the holdup for our ETFs now? There's nothing to hold it up. So that's what you're alluding to, of course. So could we just see a swarm of ETFs getting released all of a sudden? Me personally, I hope not, because with ETFs come heavily manipulation. That's one thing I don't like. Just see Ethereum's price on manipulation. Look at the short interest that they piled on with Ethereum. I mean, it's crazy. That's the problem you have with TradFi getting involved here, because they have the ugly side of the markets that can take away the natural flow of everything. And I think that's one reason why our alt season hasn't kicked off as strongly as it has, because of suppression of Ethereum. I know we talk about this all the time. So me personally, I really don't want to see ETFs getting improved. I really don't. Bitcoin, Ethereum, I think is enough. The rest of them, they would be able to probably flow a little bit more naturally, but they're going to come in, they're going to create these. If there's a demand, they're going to create these products. And like we've showed in the past, you already see the futures ETFs. So you know what's coming. They're going to end up having, eventually what's going to happen is they're going to have a basket of these things. They're going to have an ETF for strictly GameFi. They're going to have, so all the different categories, you're going to have an ETF basket of. So if you want to trade, certain sectors, that's coming. If you want to trade certain technologies, that's going to happen. So with that, starts to change the dynamics of the entire crypto landscape, because it can't naturally flow just based on supply and demand. Now you're getting coins that could go up or down because they're part of these ETFs too. So we're extreme early phases of this. I would expect this to start really picking up, if anything, over the next few years. We could start to see that kind of picking up. So the big question now is, after Doge, who would be the next one in line? Me personally, I'd be shocked if Solana doesn't get picked, just because it's the US crypto. It's been blessed by everybody. I would be shocked if Solana wasn't the next one. Now, but if Solana gets approved, do I think it's going to cause it to pump up? No, I really don't. I feel that I'm in the camp that I think Solana is a very crowded trade. But if you were in Solana at the beginning, you made a crazy run. So you've done very well, but it's going to be really hard to match those kind of moves because of the amount of volume you have now in Solana. Like the bigger you get, the harder it is to move up. And that's just the name of the game.
That makes sense. I know this is going to be a slight cop out of an answer, but I think the answer for what is a most likely next ETF to be approved, I think it might be one of the other Doge ETFs, considering you got one through. So what's another one? Granted, I call it a cop out because it's not saying the next. I'm not saying the next. No, I'm saying there are multiple Doge ETFs that are in approval process right now.
Oh, sure.
This is only one of them.
Yeah.
And the big thing about this one is that this is not actually a ETF that holds Dogecoin directly. What it is right. it instead offers exposure through futures or derivatives instead of actually holding spot. So is it a Doge ETF? Yes. Is it a spot Doge ETF? No. But there are two other spot Doge ETFs that are in the works. And if you get the futures ones going, well, theoretically, it kind of makes sense that the spot should be short behind. But at the same time, nothing is a guarantee. And as far as the other stuff going, I think you got a very good point there. Solana, I feel like, is the one that there's just so much venture capital backing inside of the United States. And a lot of people are talking about trying to do the whole no tax on American crypto stuff. So it just seems like it would fit that alley very nicely.
And World Liberty's on Solana.
That is also an excellent point. Look, World Liberty may not be inside of the regulators, but do they know the people involved in the regulators? The answer is yes, absolutely.
Exactly. I mean, the other one that would make sense is probably XRP, just because it is big and it's got a huge community. But I would probably have to, if I had a bet, I'd say Solana would be probably next. But to go back to what you're saying, with Grayscale, they've got a lot of futures products. They've had them out for years. So they've you can almost go to Grayscale and look at all the products they have, and you can kind of see what's coming. Is what I'm alluding to. Now, be very careful with all these ETFs. Not necessarily the Bitcoin and Ethereum spot ETFs, but anything that's not a spot ETF, pretty much everything is futures. I mean, this one, we're going to say it's not quite spot. So that's interesting you brought that up. Be very careful because not all these ETFs trade with the underlying asset. Great example I brought up in the past was Grayscale had one for Solana. And you go map the Solana price action chart and you look at that ETF, man, they don't, you wouldn't even think they were the same asset. Like one time they're going up, one's dropping, it's just all over the place. So just because you buy it and it has a name, don't do that. And another disclosure out there, if you are looking at buying ETFs that are crypto, that are tied to the crypto industry, be very careful. Most of the ETFs that have crypto in the name actually hold like treasuries or US bonds. I mean, they hold a lot of stuff that is not crypto at all. So just do your due diligence and look at the underlying assets that those ETFs hold. You can't just go by the name. There's a lot of false advertising and marketing. If you want to regulate something, then you need to step in and regulate that, if anything, because that's very misleading to the customers.
I would agree, but at the same time, it seems like they've been getting away with that kind of stuff for a while. So am I being a little black-pilled here saying they're probably not going to do anything? Yeah, but at the same time, I don't really think they're going to do anything about that one.
No, they won't. But that's why I want to make sure that people are aware of that, because just make sure that whatever ETF you're getting is the actual underlying asset and it's a spot, and they actually have to hold it on their balance sheets. It can't be futures is just it's IOUs. It's paper. That's all it is. It's nothing. And like I said, they may not even trade with the underlying asset itself. So just be very careful when you're buying the ETFs. Just make sure they're spot. That's the best way I can put it.
Very true. Alrighty, we'll tell you what. Let's switch it over to a slightly different story, or series of stories, if you will. This is the bit of the countdown to the Federal Reserve Week. So here's kind of what's going on as we're getting ready for everything that is yet to come. So coming to us from Cointelegraph, they put together a nice little thing here. Bitcoin price is moving as TradFi starts returning back to the markets. So we are seeing a bit more volume, and we're seeing potentially the 60-day cycle actually run. What am I talking about? Well, I'm talking about this. To do a little bit of light TA, what we're seeing here is that we did have what appears to be our 60-day cycle low on the 1st of September. Since then, we came up, tested our 20-day moving average, that is below our 50-day moving average. retested it again very briefly before we moved back up through it. And now we're even sitting back above the 50-day moving average. So what I personally would like to see from the chart is I would like to see us maintain this area or move even slightly higher so that we can get the 20-day moving average back above the 50, which would indicate that all indicators are pointed towards a more bullish direction, which when it comes to where we are in the 4-year cycle and with all the macro events coming up here in the near future, it would make sense that people might be anticipating a little more bullish action. But outside of that, we did reach back up to right about $117,000. Didn't quite get it. But what we are seeing is that this area appears to be a bit of a holdover from this first consolidation area. So the question is, all right, we've reached this. We have not gone up through what appears to be a support level, which means what are we going to do now? Are we going to go back down, test the 20-day moving average, stay around this 50-day moving average? Well, I think that the answer in that honestly does lie in what happens on Wednesday, as much as I hate to say it. It is possible that we can start to see a little bit more volume in the market, but as it stands right now, if we look around in the eco space, literally everybody and their mom is waiting to see what Jerome Powell is going to do. We're going to talk about it a little bit later, but we are in concurrence that we believe about a 1/4 point cut is factored into the market, but there's a possibility it could be more than a 1/4 point cut. The reason that we say that is that because, well, if you remember back in 2024, there was a rate cut that happened. Everyone was expecting a 1/4 point cut or maybe 2 1/4 point cuts by Jerome in anticipation of the election or leading up to the election. And instead, we're going to 1/2 point cut kind of out of nowhere. So that kind of stuff is absolutely possible. But when it comes to the macros, what we're seeing is that we're on a bit of an upswing. Could it continue? Yes. Could it also have a small retracement before we continue and have more of an extended or right translated cycle? Yeah, that's also a distinct possibility. But at the same time, it is important to note that a lot of the other assets are doing very similar things. Ethereum back above the 20-day moving average as well. And what I found particularly interesting is that Solana has actually been on a bit of a tear lately. It did have its bottom back in early April, but since then, largely been up and to the right, especially over the last 2 months, effectively, where we have just stayed well above that 20-day moving average. So even though there is the anticipation of rates cuts coming, the market is doing its own unique things going on. Solana, I think, is a good example of that. And by the way, it got all the way up to $250, which, if you remember, the previous all-time high, which we hit back in January, was about $290. So that's really not that far away from moving up and towards that direction. Additionally, remember, when Solana moves towards the upside, in general, a lot of the stuff on Solana tends to move to the upside as well, which does include meme coins and whatnot. Which, speaking of which, by the way, they've been doing pretty well lately. And I am frozen. Can you hear me, Tracker?
Yeah, I got you, man. It was just a blip.
All right, sounds good. Well, let's take a look at what we talked about last week, which is the altcoin index. You might notice we're above 75, which means it is technically altcoin season, even though we're waiting for what's going to happen with the Federal Reserve, which is why I'm saying that the market is moving and continuing to do what it does, despite this giant holding pattern that we've been in for largely a month and a half. But again, like we talked about last week, when it comes to the altcoin season stuff, these things can be blips on the radar, which could be a week, could be 2 weeks, could be 3 days. That kind of stuff. So the question is, do we continue this trend and move farther into altcoin season if we get good news from the Federal Reserve, aka going towards quantitative easing and some money printing, or if this is just a flash in a pan? Either way, it is exciting because we've officially reached territory that we don't reach that often. Anyways, back to our article, or sorry, Tracker. Toss it over to you.
Yeah. So
what are you feeling about the crypto market right now?
Overall, I think me personally, I still think we're moving up. Now, could we have some fake outs? Could we have some pullbacks? When I say small pullbacks, I just don't, if everybody, typically the contrarian tends to be right. So if everybody's betting that we're going to go straight up when they announce the rate cuts, I think you're going to be sadly it's going to be a letdown essentially when they do come out on Wednesday and say that. 1/4%, it's almost guaranteed. Are they willing to do a 1/2 point, half a bit? If they're going to do that, it could get very interesting then, because I think then you have like you said, a little bit of a shock moment, saying, okay, it's go time. And I think if you looked at the Bitcoin, you looked at Ethereum trading sideways here in these actions, I think it needs something to really catapult it and break it out. Very much like when Jerome Powell hinted at Jackson Hole with the rate cuts. That's what pushed us to that immediate, green candle to the upside. That gave us that breakout. right? That's what triggered it, and that caught a lot of people off sides. So with that momentum going up, I think that's what you're going to be looking for, really. Even if you only get a quarter cut, I still think you could have a pullback, or you could have a raise up. I think eventually there's going to be some manipulation going on here. But over that, weeks or month, the technical analysis and looking at what our indicators are telling us could give us some little bit of a, flashlight in the dark of telling us where those levels could be, where we might retrace, where we may go up, all those things. So those are things we really got to keep an eye on, is really the technical analysis. Jay's always on top of that. Zenith, of course, is always on top of that. But I just don't think it's not going to be just crystal clear. We're not going to go straight up. Something else. I know Zenith is trying to get back in here. Something else that I'd like to bring
I'm
up.
here.
Okay, cool. No worries. So overall, what I was just stating was, I think if it's a quarter, we could go up, or we could get we could have a sell off to kind of shake some people out. I think regardless, whether we make new highs or we pull back, there's going to be a little bit of a snapback, a little bit of games going on here to kind of rotate some people out, try to shake them out. I know with this little kind of sell off going into these last few days, I know Dace had pointed out he thought there would be a little bit of a shakeout before the news comes out. Personally, 0.5% would be awesome, because it would catch everybody off guard. That would probably then catapult Ethereum up to that 5,000, if not beyond it. That would be fantastic to see. If not, it's going to be interesting to see how the markets respond to the rate cuts. And that's the other thing. Even if they come out and say we're only going to do 0.25%, if they come out and they say they're going to be more aggressive, then that absolutely could fuel much more anticipation that we move up. One thing I did want to bring up here is the derivatives and the treasury markets. They're definitely signaling that we're going to have more rate cuts coming out over the next year. Derivatives, treasury markets, pretty smart money is involved in there. And what they're seeing is they're expecting us to have somewhere around, our rates should be somewhere in 7.75% to 3% by this time next year. Or conservatively, that might be 3 to 3.5% this time next year. So we're going to get more rate cuts coming. It's just how aggressive are they going to happen? And everybody has to keep this in mind. Jerome Powell, after May, he's out of there. So the administration wants their cuts. They're going to put somebody in there who's going to be aggressive at giving them their rate cuts. So I expect the rates to get very aggressively cut. When I say very aggressively, I know it's it's not specific, so I should probably correct that. If we somehow pull back from 4.25, 4.5-ish, right around now, and if we pull all the way back to say 2.5% to 3% between now and next year, that's a lot of fuel being added. Right. And then, of course, as they cut, that could increase depending on, how is it affected positively or negatively? Because it's a fine dance that they have to balance out. But this administration will absolutely throw everything at it to stimulate this market. And they want those lower rates. Why? Because the government wants to restructure their debt. Why? Because they want people to restructure their home loans and so forth. That will absolutely stimulate a lot of things. So they want those lower rate cuts. That they've made it very clear, and they're going to get it one way or another. Depending on how the markets respond, that's going to be interesting. But typically, when we start doing these rate cuts, I know everybody already knows this, risk on assets should do very well in that environment. But in the interim, it might be a little bit of a nothing when they come out on Wednesday. But it comes out to how they're going to sound. And I'm reiterating the same thing, but really what they say. Just because it's a quarter doesn't mean they may come out and say we might be more aggressive. That's all the markets would have to hear. And then that would absolutely catapult us more to the upside.
Agreed. There's definitely two things to be looking for. One, obviously, is the decision, but two is looking at the press conference and seeing what attitude they have about it. Which, by the way, this is the rest of the year. We got this one, and then we got two more, and that's it for 2025. That's not a lot. I know we talked previously that some people are coming out there and anticipating quarter point cuts for the rest of the year. And now we're even starting to see people say that they expect a half point cut now and more into the future. But the question really is going to be, what do we see? As the market's looking right now, flipping on over to FedWatch, we get about 95% chance of a quarter point cut and about a 5% chance of that half point cut that we're talking about there. And if we move it out even into the future a little bit, well, that's where we start to see that at that point, in October at the next one, they're expecting another cut. And that's the predominant factor. And then if we go one beyond that, the most probable factor is another cut as well. So that's why we're we're saying these things here, which is that this is a tool that uses the futures markets to look at what they're betting on to happen. Granted, again, like as Agent J always says, once you get pretty much past like a week or 2 weeks, these numbers can and will change very drastically. Like for instance, this one, I'm pretty sure, yeah, even 1 week ago, the half point cut here, that's 10% right there instead of what we're seeing now, which is 4.1%. So
right. But here's what I'll say to that, and he's correct on that, because things change constantly around here, and you know that as well. So when that labor market number came out, they knew immediately with that number. That's why the markets there, they didn't sell off, because they were like, that was basically bad news is good news. Because if they're getting that negative, economic data like it was, I mean, that was a lot of people unemployment. Unfortunately, it was really sad to see. But with that happening, that translates into the more high likely that they're going to be more aggressive on the rate cuts. So, and if that data keeps coming out and it's still showing to be negative, they're going to have to even get more aggressive potentially with different tools. But they've got a lot of different things. They have a lot of different levers they can pull. So
yeah,
you're right. You can't look out further. I honestly, it will not shock me one bit if we are at 3.5 to 3.25 by end of 2025.
Wouldn't shock me either. But yeah, it sounds crazy to say that whole like bad news is good news kind of thing, which is that bad news for economic data is at this point, based on the conditions, seen as good news because everyone has been asking for rate cuts for like almost like over a year at this point, effectively. So yes, is it bad for the average person who's having to like, go traverse the job market, which I do not envy anybody that has to do that currently. In fact, I wish you the best of luck because it's rough out there. It really is. So it's a weird effect, which is the daily life is not looking super great. But if you're in the crypto markets, we're kind of hoping for it to get a little bit worse if you're specifically looking for an injection of capital through the rate cuts. But at the end of the day, it kind of is what it is. You just got to make the moves that you can based on what's available.
Right. And I think it's because of this that the crypto market could we have a little bit of, some manipulation going on? Certainly either up or down. Sure. But I still think, it's going to be very risk on between now and end of the year because they're going to create an environment as such to create that risk on appetite. But now I think once we get through this, the scary part is like, and this is something we always talk about in the markets, we're past kind of the early stages. Now we're climbing out what we always call is the wall of worry, right? If everybody is thinking, so if more people are they hate this market going up, that means there's a lot of money on the sidelines. I know we talked about this last week, but they're scratching their heads. How is this market going up? Everything tells you it should be going down, but it's not. Once again, the contrarian tends to be on the right side of this. So if more people thinking that we're going down, that's what creates a market. That's why we're probably going to go up, and vice versa. The more bulls you have, the more likely you should be getting bearish, and the more bears you have, the more bullish you should be getting. And that typically is how it works. But like I said, you're climbing this wall of worry, meaning the markets go up, the more worried people are getting, whether they're on the sidelines or they're looking for when's this top going to fall out. And I think right now it's not the time to be worrying about it falling out. I think that between now and end of the year, we should be moving more toward the upside, hopefully more aggressive. And then after that, we'll have to cross that bridge when we get there. But we have to take this, I hate to say day by day, but honestly, as the data comes in, we have to start looking at what's going on. Reevaluate.
Well said, sir. Tell you what, let's keep it rolling here. Next thing that we're looking at here from our 5-topic article, the Bitcoin bull market top may just be weeks away. So for folks at home that have been counting down the days, if you go top to top on the 4-year cycle, yeah, we're getting close to what should be the 4-year cycle top. If you go on the strict 4-year, you're looking at the end of October, beginning of November. And if you're looking at what has been a little more consistent, which is about 3 years and 11 months, then you're looking at early October, effectively, which means we're 2 weeks away from what could potentially be a top. At the same time, though, the question does remain of, are the tops more probable or are the bottoms more reliable when it comes to predicting that 4-year cycle? I happen to think that the bottoms are a lot more reliable, and I think Agent J would agree with me based on all the research he's done as well. But the main point is that we are getting to that point in the season where things could get a little parabolic. By the way, special shout out to Donovan of DIY Investing. I was catching a stream with him chatting the other day, and he was saying that, like, just remember that at the top of markets, Bitcoin and other assets can effectively do a 2x in the course of a 2 weeks, and then just call it there and just go down. Stuff like that is very much in the realm of possibility. I know it sounds crazy to say, but like in the matter of 2 weeks, Bitcoin could go from about 115,000 to, if it got stupid crazy, yeah, about $200,000 before just dumping into the next bear market. That kind of stuff we have seen before. So again, it's just stay frosty, stay on your toes. But in the article,
that makes a lot of sense, and that's one way to put it. So and that's why I'm saying you got to handle this day by day, week by week. That's what we always talk about. Don't get too far ahead of yourself. Yeah, if we have a parabolic move like that where everything is getting stupid run, yeah, absolutely. Because the faster we go up, the faster you're going to have sell-offs. It's non-sustainable. But if we kind of grind our way up, and alt season can kick off, and the alts and the mid caps can start to really run, including those small caps, then yeah, you could see some big gains in those and have a traditional altcoin season for 2 to 3 months. But like I said, if depending on how quickly that move is how quickly it's going to sell off faster. So that's one big factor that people need to understand. You can't just put a time box around everything. Like, we're entering into a time where we think alt season should be kicking off. Obviously, you showed the chart that showed that, but keep in mind, just because you can't, I mean, if you're sitting on it and you've made, many X's investments, let's just say hypothetically, you're not going to sit there and say, well, I still got 2 more weeks, I should sit tight. That's very reckless. So don't get too greedy if you do get those opportunities. Practice safe, taking profits, taking it out. If you get a nice 2-3x, maybe take a third off. You get another 5-6x. If you're so lucky to have that, take another third off and then let the rest ride, for the moon bag. But you got to be careful. You can't get greedy. We can't time box everything. It's week by week, looking at the data that comes in, how quickly are we moving, and then what's the macro data telling you. It's a lot of moving factors here.
Agreed. Well said. Alrighty, let's take a look at what they got here. Predicting the top for the current Bitcoin bull market is an increasingly heated topic among participants. Some believe that the 124,000 will remain intact until next cycle. Over the weekend, founder and CEO of crypto analytics platform Alfractal tapped his historically accurate Bitcoin price forecasting tools Proof. So he's using what is called the MACD, moving average convergence divergence, to look at that on the 1 week time scale. Max intersect simple moving average model hasn't signaled this cycle's top yet, but it's getting very close. Accompanying charts puts top at around 140,000 based on another analysis. So, and a golden cross of the moving average convergence divergence indicator at the start of September delivered a bold 160,000 target over this coming month, again based on historical patterns. So, do we have 3 different targets there? Saying that one has already happened, one is 140, which is about 30K away from where we are, 15K higher than our previous high, and another saying 160, which is about right where we've been talking about for probably going on 2 years now, based on just some old Fibonacci polls and retracements that we did back in the bear market. So are there a handful of targets? Yes, absolutely. Are all of these going to be correct? No, that's just how it works. But at the same time, these could also all be wrong as well. And that's why we go back to what we just got finished talking about, which is like, you don't really know where it's at. You can try to use your best guess based on a bunch of indicators, but at the same time, building a strategy to ensure that you do secure some gains and a good amount of gains along the way, I think that is probably going to be your best strategy going forward.
Yeah, we've had those price targets for November, December time. We've had those price ranges locked in at the mid one they had, around that 140 area, give or take. And then of course the moon bag shot would be, up around that 162 area. So that's in line with certain levels we've been looking at. Certainly there's nothing that those aren't to scoff at. I'd say that's pretty much in line, but at the same time, if that translates to Bitcoin, what is that going to do for ETH and the alts? I mean, to me, I would expect ETH to outperform Bitcoin during that run. Mid caps should definitely outperform if we're getting a true alts, and then of course the small caps are just going to see stupid returns in a very short period of time. So I would certainly love to see Bitcoin hit those kind of levels.
Believe me, I think we all would. That's kind of why we're here in the first place.
Yeah, I mean, we don't need 200,000 Bitcoin. Like everybody keeps saying 250, 200. Some people throwing maybe more. I just anything's possible. I'm just looking at more probability. And if it
That's
were to
true.
get up there, that's fantastic. That's great. But I would rather lean towards more of the conservative side than, doing the moon math.
Fair. Even just to step back a little bit, if you were able to capture Bitcoin under $20,000, you have effectively done a 5x. That's pretty dang good, especially considering it is Bitcoin itself. Are we going to see those kind of returns moving into the cycles into the future? I happen to think it's going to go down over time. But at the same time, though, doing a 5x over the course of 2-3 years effectively, that's a pretty darn good return on your investment looking at the rest of the space and everything else that was available. Look, unless you hopped on the Nvidia train early, I still think that being in crypto is a place where to go if you're looking for those outsized gains. And I think based on everything we've been talking about and what's been proven over the cycles, it's not too crazy to figure out and be able to do effectively. Anyways, let's get back to the article here. I got a few more points I want to get through. Binance is showing signs of large volume buying. The largest crypto exchange, Binance, is hinting at a Bitcoin supply squeeze and a potential boost for the bulls. Latest on-chain analytics platform, CryptoQuant Research, concluded that a large buyer may have been active on Binance this weekend. Contributor Arab Chain flagged the Binance Scarcity Index tool as proof. Quote, the index jumps when immediate buying power exceeds available supply, as if buyers are racing to acquire Bitcoin on the market, it wrote in one of the blog points. Quote, this type of spike is often linked to positive news or sudden capital inflows. Same pattern occurred last June and persisted for several days, after which Bitcoin climbed to around $124,000. So, with that being said, have we gotten any good news lately when it comes to Bitcoin?
Any really good news? I'd say Ethereum's had probably more of the good news than Bitcoin's had recently.
Agreed. So based on that, leads me to believe that we're not seeing the positive news, but we're rather seeing capital inflows.
Correct. And Binance makes a lot of sense because Binance is more targeting towards the international central exchange, unlike Coinbase, which is US exchange. So listen, I'm more shocked that Bitcoin hasn't really started moving on the Binance or the international central exchanges, just because there's less confidence in the US dollar. I mean, more people are leaning away from US dollar more and more and trading them more. So this trend's going to keep happening regardless if there's positive news in Bitcoin. Period. Is how I'm looking at it.
Sense to me. I mean, I think that the flows definitely show that money has been going in heavily lately. And I don't see that there's massive outflows yet, which that's exactly what leads me to believe that, yeah, money is still coming in and it's definitely being onboarded, whether it's retail or TradFi. We're not really going to know unless you get announcements about it, which thankfully we do from people trying to really stake the flag and try to do stuff like Bitmine and SharpLink. But outside of that, it's just trying to watch the volume and see where it's going and where it's coming from.
And to add to this, man, it's interesting because on central exchanges, the problem is with central exchanges is, I mean, governments can step in and force their hand to do whatever they want with stuff. They could seize stuff. They could blacklist people's, accounts and stuff. I mean, that's the scary side of the house. So it's curious to see which central exchanges are going to be more free for people to use. Binance is the big one out there, but I know we already saw them get shaken out with CC. But the last couple of years, he got shaken out of there. So I don't know what central exchanges international would be one that I would be curious to watch because unfortunately it's risky. Central exchanges bother me because the fact that they can turn on and turn things off. That's the thing that scares me about central exchange. They're great for onboarding and offboarding and things of that nature, but I'm more concerned about what do you do when that central exchange is getting pushed around by governments or for whatever reason. So that's one thing that kind of scares. I know it's kind of off topic, Zenith. I know it's off topic about the whole, Binance seeing inflows to Bitcoin, but I'm more curious to know, is it because people, I guess what I'd be interested to see, are there more individual addresses owning Bitcoin? Is that rate growing quicker or is the central exchanges accumulation or inflows of people buying it? Is it faster accumulating there? Like is coin staying on the central exchange, or are they buying it and moving it off the central exchanges at aggressive rates? That'd be something I'd be interested about too.
I would agree with you. That would be a good indicator of things going on, I believe.
Because if people are moving it off, they're like, I'm hunkering down. I'm moving it to, cold storage. I'm moving it off that. I'm going to hunker down, just keep it and own it. I mean, if you're, listen, if you are one of the fortunate to have a lot of money, then it's always about diversification. And part of that is you need to own all different types of assets. So have powerful entities out there, people have lots of money. Have they even started tapping into this? Maybe not. I mean, there's not that many people that own it. You would expect people that were smart with money would probably already own some of the stuff, but maybe not.
It's true. I believe this is the correct chart that we were looking for. Exchange reserve, central exchange reserves for the amount of Bitcoin on it.
All right, so there you go. I mean, you're seeing you're seeing if those supplies are coming off. So if the supplies are going down, I'm just gonna have to assume that when they say the exchange's reserves are going down, does that mean that people now own the reserves? Meaning, like, for example, I'm on the central exchange and I buy it, even though it's still on the central exchange. Are they counting that, or are they counting what the reserve that they have still available for users to buy and purchase?
My understanding of the data that we're looking at here is that this is the total amount of Bitcoin that is on these central exchanges, meaning
regardless of who owns it. Yes, that's what I've always thought as well. Yes, that's how I've always taken it.
Which means that people are doing some self-custody here. Which,
yes, absolutely.
Look, as fans of self-custody, I'm all for it. But at the same time, we're trying to use this as an indicator of everything going on. Meaning, if there's less supply on the exchanges, it's going somewhere. Namely, it's probably going outside of liquidity pools, meaning that's where you're going to see price action going on.
Mm-hmm. So, yeah, it's yeah, that's a pretty significant drop. I mean, you're looking at 1 million, roughly about 1 million out of 3.4 million going back to 2022. I mean, that's a good haircut. I mean, that's a nice little 30% trim on their actual supply. So, does that keep going on? I would probably say that trend probably will keep going.
Makes sense. I know that for the folks at home, it's a little hard to see, but the chart, the blue line here, this is the one that shows the Bitcoin on the exchange. Does the chart look aggressive? Yes. Is it a massive drop? No. As Tracker was just pointing out, the left side of the chart over here is your scale. It's kind of hard to read, but over here on this side, around October of 2022, we're looking at about 3.3 million Bitcoins on exchanges. Now we're looking at about 2.4 million on exchanges. That's a 1 million drop effectively, which it's a good chunk of change.
Yeah. So you're the reason why these charts are always fun to look at. I mean, we like them, but if you've never seen these charts, they look a little wonky. Like what all they've done is they blended two charts together. They've overlaid two. So you have one chart that shows you the supply, which is that blue purplish line. It's going from the top left to the bottom right, and then on the other side you have the black line. It's going from the bottom left to the top right, which is the price action of Bitcoin. So as the price has been going up, you're seeing the reserves on the exchanges of what they own going off the exchange. So that's an aggressive chart. That's very bullish for the Bitcoin price overall, because somebody's going to have to go step in and start buying Bitcoin to get those reserves up. The question is on these central exchanges is, when is those critical threshold levels get hit that they have to start accumulating and buying more aggressively? Like, I don't know, do they have it when it kicks only 1 million on there? They have to get aggressive? I don't know. I mean, every central exchange probably has its own criteria, but eventually they'll have to step in and start accumulating more. If they're smart, they're gonna. So here's the other part of the funny picture is these central exchanges don't want to have to go out there and buy it at the all-time high prices. So they're probably trying to wait for Bitcoin to pull back to get good entry levels to buy and accumulate it instead of buying high. But eventually, if the demand is still there, if they want to operate, they're going to have to buy it. Thus, you could have a push up in the price. But that's the game they're probably trying to decipher: when to step in and buy. When do they have to take action? And I'm sure they have it down to a lot of different nuances and requirements that they have in place for that they've already thought through.
Makes sense. Well, tell you what, we'll go ahead and close out the article here. ETFs wipe out newly mined Bitcoin. When it comes to large Bitcoin buys, all eyes are on institutions going forward as the crypto exchange traded products see large inflows. Cointelegraph recorded that the ETFs achieved net inflows of $2.3 billion last week. This led Keith Allen, co-founder of Trading Resource Material Indicators, to suggest that the scale of institutional interest will ultimately lead Bitcoin to some new all-time highs. Quote, why? Because there's simply too much institutional demand, and demand is growing. Here we see our charts suggesting the inflows. And yeah, overall, we've seen nothing but inflows, and I believe this is on the weekly schedule. On-chain analytics firm Glassnode noted that the ETF's 5,900 Bitcoin inflows represented their largest single-day tally since mid-July. This pushed the week net flows positive, reflecting the renewed ETF demand as Bitcoin consolidates above its $114,000 level. Common argument revolves around institution buys outweighing the amount of newly mined Bitcoins to the Bitcoin supply miners, and the European head of research at the crypto asset manager Bitwise calculated last week's inflows at almost 9 times the newly mined supply. So, I know, look, the halving, is it a bit of a overblown narrative sometimes? Yeah, agreed. But at the same time, though, supply shocks are a real thing, and you got to look at what's going on with the incoming supply and the outgoing supply. If we're at the point in the market where we are consuming 9 times the amount of Bitcoin that is being mined on a weekly basis, in my opinion, that is a very bullish indicator because it means it's eating in somewhere else, and namely being liquidity pools or other people just selling. So overall, is there any takeaways from that one?
I mean, no more different than what we've already stated at this time. That basically supplies are going down, people are accumulating it. There's going to be more demand coming in. There's a lot of reasons why people are starting to step in and buy it. And everything keeps getting more and more aggressive to allowing you to buy it. I mean, like the article we covered about 3-4 weeks ago, how PayPal is going to start allowing you to start trading up to 100 different cryptos. I mean, think about it. If we're allowed to start transacting in crypto, why do I need to off ramp or on ramp? Why do I have to off ramp into a bank?
Makes
So
sense.
it's things like that to say, I'll just own it. I'll just own the actual asset. And it might be volatile. It might be times to own it and not own it. But overall, if I have it, I own it and I can use it and buy actual things in the real world. I don't need to own US dollars. I don't need to go into the TradFi markets anymore. And I think that's going to be the more interesting take on this. And of course, if that is the case, then, it's just it's another narrative to feed the supply or the desire to want to get into crypto. Like I said, we're in interesting times. So the one thing that's still going to be interesting, and I'll still hold true on this, is if we go into a really bad market eventually, crypto is going to sell off. Now, how much is it going to sell off? I don't think it's going to be as bad as it has been. I think it could still be, don't get me wrong, it could still be bad. I think most altcoins will get destroyed like normal. Bitcoin will probably hold up better than it has in the past. Ethereum will probably hold up better than it has in the past because these are more maturing markets. So sitting and owning it's not necessarily a bad thing. Personally, I won't be just sitting there owning it, holding it, because I still think you're still going to have risk on assets. Just like any asset, it's going to get hit hard when you go into a hard market or a pullback bear market. Regardless if it's a recession or not, you're going to have a hard hit in the overall market. So the question is what to go into. Which was going to what I was saying last week. It's interesting because the gold, silver markets, they're starting to those have been moving aggressively. Precious metals.
They have.
I've been very aggressive. So what I was doing, all my dry powder that I've been holding it in gold. Now, keep in mind it's futures or paper gold, but those ETFs, I can sit there and own gold while I'm just sitting there waiting for the right time that I want to take action. So even though you're just sitting there in gold, I mean, over the last 2 months, I think gold has had, I don't know, it's roughly 8% move, 9% move, just sitting and chilling in cash, essentially. So gold's held up very well. Now, there will be times where gold does sell off. I mean, historically, it will have its time. But right now, this environment it's in, with the amount of printing going on, gold's going to do well. Precious metals are going to do well. But the surprising one is silver market going up. That's typically a leading indicator of the overall markets, the economy. So if silver's making big moves, what's making silver make such a big move? If the economy is so bad that everybody keeps saying.
True. Tell you what, give me a time frame you want to pull the price range increase on silver from. How about since the start of the year? How's that sound?
Sure.
Well, silver's up 50% since the start of the year. Does that sound like a precious metal or a crypto asset to you?
Well, what I'm just simply alluding to is just say everything you're trading is in the crypto markets, right? Well, you don't want to just sit in stable coins necessarily because you're just sitting there. It's not doing anything. But if you can try to move it into something or another asset that's going to be safe, that's going to appreciate, that might be another strategy for some to take on. So you're sitting in something else. And of course, if things turn bad, I mean, typically gold will hold up better. I mean, gold's going to always hold up better than silver, but it's interesting that silver's making a big move versus gold. So because silver's used in more manufacturing.
Very true.
So
tell you what, sir.
I just think you need to be hedged. You can't just be sitting in one thing or another. I know some people say, hey, be in Bitcoin, be in stables if you're uncertain. I know that if you want to be aggressive, and Ethereum is still way lagging Bitcoin. I'm still in the camp that I still think you're going to have an altcoin season. Depending on how long it's going to be, the market's going to tell us what that's going to be. But I still think we have more potential to the upside for that. And I think going back to the article, how you thought, like, traditionally the 4-year cycle is coming to an end, regardless how you want to look at it, in October, November. I don't know, man. I'm just not buying it. Now, if we get a violent move, then I'll be more in favor of that. If we don't get a violent move, then I'm more in favor that we're going to probably extend a little bit further. That's my 2 cents. But like I said, as we get further out and get closer, let's see what everybody's saying. And plus, just taking the settlement of the overall markets. If everybody's if everyone starts getting like selling, everyone's saying sell, and get out of the market. Now it's time to get out. A lot of times it's probably not. Just kind of get a feel for what the narratives are going on out there.
True. Makes sense. Tell you what, sir, we are heading towards the top of the hour here. I believe you had one final topic you wanted to chop up real quick.
Was that about the treasuries and derivatives markets?
Yes, sir.
Yeah, I hinted on that when you're kind of in and out, but essentially what I was saying was, so the treasury and the derivatives market, that's smart money. I mean, they know what that's some of the deep end stuff. And like I said, that the derivatives markets and the treasury markets are signaling there's going to be many more rate cuts coming between now and end of this time next year. So some of them are looking at, so in 2026, they're kind of anticipating, the derivatives markets are anticipating us to be somewhere around that 2.75 and 3% by this time next year. That's what they're saying. The treasury markets are expecting it to be somewhere around that 3% to maybe 3.5%. So that's a lot of rate cuts. I think it's going to be like, that's a long time between now and there. That's a whole year away. But this is why I think people are looking at it, because people are not, how do I put it? People are not necessarily restructuring their debt now, and they're not looking to take on a lot of new debt because they're seeing that kind of stuff coming. That's what they're pricing in. And I think it's, if you think about it, just take a step back, the administration's made it very clear they want to cut rates drastically. Jerome Powell's been the only one that's been holding it up. He's got his own reasons why. He's got a lot of legitimate reasons why, because he's trying to see what the data tells him. But if they come in and start cutting rates, even if he starts cutting it a quarter or a half or just 3/4, going into now, everyone's forward thinking. They know in May he's out of there. So, and they know, the administration has already stated they want to put somebody in there who's going to be more aggressive and get what they want. So I think you throw that into the catalyst, I think you're gonna get more rate cuts coming, regardless of how aggressive Powell's going to be. So I think that's what the treasury and the derivatives market's telling you. Smart money.
I like it. Fair enough. Tell you what, sir, we're going to go ahead and call it a day there. But before we do, I do want to give a shout out to the folks at home who have been hanging out with us the whole time. Moonpilled Rational Optics getting in here with the first one. He says, gather together, fellow walkers. Tonight we were in search for the brainiest of all people in crypto. Hey, I hope we can find those guys wherever they might be. Who knows? Could be you guys in the comments. Speaking of, we also got Centurion 54X coming up. Good to see you, sir, as always. But yes, By the way, if you guys want to catch more of us and everything we got going on, go ahead and head on over to, oh gosh, is it showing up?
No, it's not showing up.
How about now? Apologies for the technical difficulties tonight, folks. But if you want to go somewhere where we don't have issues with StreamYard, that would be our private Telegram group. In there, you can find anything from additional content, our main chat, and also all the extra content via streams that we put out exclusively for everybody in there. So if you want the best and the latest, that's where you're going to find it. As we like to say, the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together, private mentorship, exclusive live streams, Q&A, go from beginner to intermediate to expert with us. And I can guarantee you that there's going to be a lot of content in there this week because, as we've been talking about for what feels like months at this point, Federal Reserve Week. This is when we nerd up and we nerd out and we watch all the press conference, break it down, and share all the tidbits and the juicy sound bites with you guys. But yep, that is where you can find us. Outside of that, Tracker, any final thoughts, good sir?
Just that it's been kind of quiet in our membership area for probably the last couple of days, and it's because it's like the calm before the storm. But I can tell you, when things are popping off, like for example, when we had that massive move going into out of Jackson Hole when Jerome Powell talked, the activity was just spiked dramatically. Like everyone tends to get really spun up on things moving, but of course Jay's always done giving us good TA on what to expect and what's coming and areas to watch, whether it's bearish or bullish, and on the cycles and just all the indicators that you need to be preparing for, which is really good to have. But yeah, typically it comes in waves. So when things really spin up, that's when things are popping off, and people were trying to do a lot more live streams, trying to tell you what's going on, potential price targets, pullback areas if we do get those, and what seems to be moving across the markets, because we're watching a lot of stuff. There's a lot that we're watching. That's the reason why it's such a good idea to be in a community where we can feed off one another to try to help everybody. And it's a lot easier to stay on top of it all when you're in a community. Doing it by yourself is 24/7.
Oh, absolutely. Couldn't even imagine trying to do it by myself. That would just be way too much. Or you just miss out on so much.
Yeah, you will miss a lot. So yeah, that's where we're over about in that area. I love doing the Monday shows just because it gives us to kind of step back and see what's coming on for the week and what's transpiring. But yeah, Wednesday, all eyes are going to be on Wednesday. Personally, if I had to bet, 0.25% is probably what we're going to get. Jerome Powell, to me, he never really will come out, and he's always going to lean towards the conservative side. I'm hoping he comes out. If he does do a quarter, I'm hoping he comes out and he seems very he's leaning more towards doing more aggressive natures if they need to step in and do it. I think that would be the ultimate thing that we'd want to hear. Would be nice to hear something along those lines, something that would bring confidence and appetite for risk. That's what we want to see.
Makes sense. Well, tell you what, we're going to keep a weather eye on that Wednesday meeting and see what goes on there. But outside of that, yes, folks, that is everything we got going on. Thank you so much for joining us. I'm Zenith. You can find me on Instagram and X at ZenithDI, but more importantly, inside that Telegram. Outside of that, folks, thank you so much for joining us. We hope to catch you guys very, very soon. But until we do, I hope everyone has a great evening out there. Good night.